Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of April 14th through April 18th. We're in part one of our weekly trading game plan. We'll try to help you make money when tariffs are on, when tariffs are off, figure out now what, and make money trading whatever comes. So let's get started. Welcome, Fairchild. Thank you for joining us. Hope you had a great trading week and are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for April 14th through April 18th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas for this trading week. You can find a direct link to this Google document in the description box below. We keep all of our Google documents for our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plan notes. And you can also find a direct link to that publicly accessible Google Drive folder in the description box below. So firstly, we'll take a look at how the markets ended up on Friday, and then we'll look at a breakdown of the major indices and the technology components. So we could see Friday we had a rebound week on this whiplash of tariffs on, tariffs off. We'll see how that whiplash occurred. We can see the Dow ended up 1.5%, NASDAQ up 2%. S&P up 1.8%. So after going through that whiplash of tariffs on, tariffs off, we ended up positive for the week. We had almost 74% advancing, only 23% declining. However, we only had 22% new highs, 78% new lows. We've only got 12% above their 50-day moving average, 88% below, and 17% above their 200-day, 83% below. So although very positive rebound on Friday, still got a lot of weakness under the covers. So even though it shows a little bullish, again, under the covers, we've got a lot of bearishness going on. See, most of this was driven by a rebound in the Mag 7s. So Apple, Nvidia, Broadcom, Microsoft, Google all rebounded. Only Mag 7s in the red were Meta, Netflix. Most of the sectors were green, so just a few reds, Oracle, etc. Welcome, RT. Thank you for joining us. Hope you had a great trading week and are doing well. Look at some of the news. Tariff uncertainty isn't getting any better. So again, we're going to try to figure out, what's next and how can we make money trading that. Dow jumped 600 points, capping off one of the most volatile weeks on record. Bond funds get hit by heavy outflows, so we'll see that dramatic drop in bond prices, spike in bond yields. They're saying that's due to inflation fears. Stocks rise despite recession fears. Treasury yield surges. Market sank and soared. New fear. So we'll look at what the level of fear is in the market as well. Also got a rebound in oil. Oil had broken down below 60. It rebounded back up over 60. So now that 60 will provide some level of support. Might trend back up to 65 or so. Natural gas had also broken down below 350, regained that 350 level. So we'll see if it trends back up towards 4 again. Gold surged back up to a new all-time high. Broke that 3250 level, so probably do some consolidation there. Might actually go up and test 3300. See, all the futures right now are pointing positive for Monday. Bitcoin also rebounded after breaking down. I think it broke down below 80K. Again, rebounded back above 80K on a risk on Friday. So now that 80K will probably provide some level of support. Again, bond yields surged back up, so 30-year almost to 4.9, 10-year just below that 4.5 at 4.49, 5-year at 4.16. So we saw a big surge in bond yields. big precipitous drop in bond prices. Welcome, Keaton. Thank you for joining us. Hope you had a great trading week and are doing well. So if we look at the breakdown of the major indices, just a quick reminder, you can also access these screeners and the screener sheets of our ETFs and Watchlist Google Sheets as well. So again, we see that whiplash in all the indices with the tariffs on, tariffs off. So as we'll discuss further in our strategy, when the Liberation Day tariffs went on, we got that precipitous drop. When they took tariffs off, got that 90-day postponement. Got that reflexive bounce back up. Some people say that was a short squeeze. It's very possible. Also just a reflexive bounce. You can see in all the indices it bounced back up to the previous low, but didn't make it back to where they were before the tariffs on. IWM, not as much of a positive reaction. Again, they should not be as susceptible to tariffs, so not as much of a reaction, but some bounce and then a whiplash. Again, SPY, get that precipitous drop, tariffs on, reflexive bounce on tariffs off. So again, up to that previous low, that's probably the resistance point, and then we see that whipsaw oscillation. In my humble opinion, this is a lot of the behavior. We've talked about how the markets can tend to be like a force-damped harmonic oscillator. We got that big perturbation, tariffs on, kicked it down, and then again we get an extreme swing one way and we get an extreme swing the other way. I expect these to oscillate in a tighter range going forward. And we'll talk about that more in our strategy. Similarly with the NASDAQ, again, big drop on tariffs on, reflexive bounce back up on tariffs off, and then again, oscillation within a range. Also looks like we might be getting a death cross on the Qs, so that's very negative for the NASDAQ for technology. Similarly, we're very close to a death cross on the SPY. So again, IWM's already incurred its death cross. Dow not quite as soon, but again, all very negative signs for the overall indices. We look at a breakdown of the technology components. Again, we'll see a whipsaw in most of these components as well. So ARK-K, big whipsaw on the tariffs on, bounce back on the tariffs off. Mag 7 seem to have held a base, so they seem to have found a floor. So Mag 7s may be holding up better than other technology. However, again, we see that death cross now on the Mag 7, so a very bearish signal also on the Mag 7, so they will drag the indices down as well. Biotech, again, not as much of a reaction either way. Negative on tariffs on, but not as much of a reflexive move tariffs off. So, again, a lot of negativity in pharmaceuticals, biotech. Also, semiconductors didn't react as much to the tariffs on, so we see a little bit of a bounce. But again, they did not benefit from the tariffs off quite as much. TQQQ just leveraged on the Qs, so it behaves the same way as the NASDAQ. Broad technology, again, a more muted reaction, but again, we got the drop on tariffs on, bounce back on tariffs off, and some oscillation, but again, less volatility in the broader technology area. Again, we got that death cross on broad technology, on the TQQQ, on the Mag 7s. Again, biotech incurred that a long time ago. ARK-K headed towards that, but again, more time. Okay, let me grab a drink and we'll look at the groups, sectors, industries, and countries and how they reacted to the tariffs on, tariffs off, whipsaw. Let's look at a breakdown of the groups and sectors. So we see Friday, almost everything green, the strongest basic materials, energy and technology and healthcare. The weakest real estate and communication services. Again, real estate very susceptible to those high bond yields. Defensives, rotation back out of defensive slightly on Friday. For the week, again, technology rebounded, basic materials, industrials, the weakest energy and real estate. Again, real estate getting hit by that spike in bond yields. Energy, again, although we saw a rebound in oil prices now. For the month, though, we've got a very defensive stance. So consumer defensives and utilities, the only green. The most red, energy, healthcare, and real estate. Again, we'll see if we see more of a rotation back into the beaten down sectors, or again, a reflexive oscillation between risk on and risk off, back to the defensives, utilities, consumer defensives. Okay, industries. So a big rebound in coke and coal. Again, Trump announced, he wants to go back to coal in some cases. Again, uranium rebounded as well. Gold and silver rebounded. Again, gold, again, new all-time high, but silver playing catch-up. Aluminum, oil rebounding. Some REITs, steel rebound. Again, almost everything green from Friday. The only negatives, trucking, broadcasting. Important factor with the tariffs is the impact on transport. So transports have a tendency to precede a recession if we see a decline, further decline in transports. Although again, with the pause on tariffs, we might see a rush to get product into the U.S. before the tariffs go on again. So probably see some whipsaw in the transports as well. For the week, again, gold, new all-time high, silver rebound, strong rebound, utilities, uranium rebounded, and steel, railroads positive, so there's transports again. Negative, some REITs, again, negative for real estate, mortgages. We see mortgage rates spike back up above 7%. For the month, gold, most negative for the month. Utilities held up pretty well. Consumer defensives, again, uranium negative for the month. Silver negative for the month. Steel, aluminum, again, mortgage-based REITs. Look at countries. Again, when we got the tariffs on, very negative. When they slapped tariffs on, almost all the countries, tariffs came off. Saw a rebound in some of the countries where their tariffs were paused. Friday saw a rebound in most of the stock markets. So see a rebound in Argentina, Greece, Taiwan, etc. Canada, China rebounded, even though, again, that they didn't lighten the tariffs or pause the tariffs on China, and that's been an escalating trade war with China. So again, China's been holding up. They're focusing more on their internal economy, supporting their exporters, etc. The only negative from Friday, Malaysia, although that's been very volatile. For the week, almost everything positive. In Greece, see a rebound in Israel, some negotiations going on with tariffs with Israel, Japan, negotiations with Japan. China negative for the week, Brazil negative for the week, even though their tariffs really haven't changed. South Africa, big rebound for the month. India, rebound for the month. Again, some negotiations with India. Brazil, slightly negative. South Korea, slightly negative. Again, negotiations with South Korea, so that had a bounce this week as well. Most negative, China. Again, we saw that big decline, and now China looks like it's found a bottom and bounced back up on Friday. Interesting. We talked about the steep, or we'll look at the steep decline in bond prices. Caton's pointing out, he says that Canada led the U.S. debt selling, and we saw a lot of Treasury selling, so prices down, bonds up. Also, China has, $1 trillion in U.S. Treasuries. There's some speculation that they had been dumping Treasuries, and that caused the decline in price. We'll talk about that again when we get to futures as well. Okay, let's talk about the economic data from last week, and we'll look at the economic data upcoming for next week. Just a quick reminder, as the important economic data comes out, I try to capture that in real time as quickly as possible, post it in the Surf the Markets channel of our Discord. Our Discord's free to join. You can find a free invite in the notes documents, also in the description box below. So again, as the important economic data comes out, important economic news, I try to post that in the Surf the Markets channel of our Discord. You get a screenshot, the raw data from investing.com. Again, any important economic news. So our Discord, again, great source for real-time economic data, real-time economic news. We also have channels you can discuss trading, all things trading, different asset classes, using different trading platforms, different trading styles. So 24/7, you can join with your fellow BeachBum traders, talking about anything related to trading in our free Discord. So we'd love to have you join and actively participate in our Discord. Again, to quickly review the economic data from last week, although again, in my humble opinion, tariffs are going to drive the market much more than the economic data. And we really saw this the past week. We got the tariff off announcement on the 9th, and we got, actually, it was pretty positive, CPI data and jobless claims data on Thursday, but the markets went down. And again, I think that's just an oscillation in the technicals. We had that big rebound on Wednesday, and then we're going to get a correction on the follow-up day, and then oscillations in there. But again, the CPI data came out better than expected, so core only up 0.1 versus 0.3 expected. Year on year, down below 3%, so 2.8. CPI month on month actually was negative 0.1 versus 0.1 positive expected. Year on year, down to 2.4. So again, this is showing, although inflation's still high, higher than the Fed's 2% target, it did come down in March. Jobless claims data, again, pretty stable, so same as expected, just slightly up from the previous month. The 4-week average, again, stable. Earnings stable. Continuing claims actually went up, but less than expected, and down from previous. So people are finding jobs. So the job market stable, inflation slowly coming down. Now the question is, what will the impact of tariffs be? Then Friday we got producer price index inflation. It was also better than expected. So core month on month, again, negative 0.1 versus expected positive 0.3. Headline negative 0.4 year on year, again down below 3%. Core is still above 3%. But again, producer inflation also coming down. In my humble opinion, I think a lot of people front ran, both the consumers and producers front ran the tariffs, stocked up ahead of tariffs, and that drove previous inflation, producer inflation, and consumer inflation up previously. I think people again bought before the tariffs hit. In fact, I'm even seeing ads currently with the pause on the tariffs, like from car dealerships, buy their inventory before the tariffs raise prices. So again, tariffs driving, purchasing both on the producer and the consumer standpoint. In my humble opinion, again, I think all this data says the Fed can wait and see what the ultimate impact of the tariffs are before they make a decision whether to hike or cut. So my stance is still I don't expect any Fed action, um, cutting or raising in May. And again, we'll continue to talk about that. We did get very negative Michigan consumer sentiment data and inflation expectations on Friday. But again, we saw the markets go up. So markets, again, are not very sensitive to this economic data right now. Again, 1 year inflation expectations went up to 6.7%. 5 year went up to 4.4%. Consumer expectations went be more negative, sentiment more negative, current conditions more negative. Again, so the consumer's not happy. Now, Powell did discount somewhat this sentiment data as maybe not indicative of consumer actual behavior. So we'll see if that turns into a further drawback in consumer spending. I think they probably have already started that, as we saw a drop in CPI data already in March. So again, we'll see if this translates into a further drawback in consumer spending. Let me grab a drink and we'll look at the rest of the economic data from last week and then the upcoming economic data from this week. Welcome, Gerald Fitz, Ricky Kahn. Thank you for joining us today. Hope you had a great trading week and are doing well. So the rest of the economic data from last week, got crude oil production pretty stable. All the different countries, they are planning on hiking in April. Consumer credit dropped. So again, maybe the consumer's slowing down on their spending. Small business optimism down. So sentiment deteriorating. Crude oil stocks down. Again, we did see a rebound in oil back up to 60. Mortgage rates, here's 30-year was down last week, probably before the precipitous drop in bond prices, spike in bond yields. Crude oil inventories up more than expected. Bond auctions, again, weak. Spike in yields, decrease in price. Talked about jobless claims data and CPI. Fed officials talking. We'll hear what they think of the impact of the tariffs, although again, nobody really knows till we see the data. Natural gas storage down or up a little less than expected. And we did see a deterioration in natural gas prices. Bond yields weak. Haven't had a bond auction failure yet, but there was expressed some concern about that. Talked about PPI data. Talked about Michigan sentiment. Baker Hughes. So we're starting to see that drop in rig count that we kind of thought last week. It actually, I think, gone up, and we expected a drop in rig count due to the oil price deterioration, and now we're starting to see that. So decrease in supply from the U.S., expected increase in supply from OPEC. So I would expect that to continue. We'll probably see a further deterioration in rig count. See what we've got next week. So we've got an OPEC meeting or report. We'll hear if that changes at all. More Fed officials talking on Monday. Import, export, crude oil stocks, mortgage rates, retail sales. This will be kind of interesting. This might tell us if the consumer is pulling back, spending less. Again, further indication of future potential recession if the consumer starts to pull back. And this is still March data. See bond auctions, see if the bond prices continue to deteriorate. Get weekly jobless claims in housing, so we'll see how this is impacting housing. Reminder, Friday, markets are closed for Good Friday, so we have a shortened week. So again, then we'll have a long weekend. Potential volatility also. We have, because Friday is the markets are closed up Friday for Good Friday. We have options expiration for April on Thursday. So we've got, some potential volatility Thursday with OPEX and a long weekend. Also, a reminder, Tuesday is final deadline for taxes. So there was some speculation that some of the behavior, some of the selling we saw was potentially selling equities to pay tax bills. Also, we just started the next earnings season. We just had the big banks announce earnings. Again, these were all backward looking. So they performed pretty well. Again, a lot of uncertainty with the tariffs, the potential impact of the tariffs. So, in my humble opinion, these backward earnings will be less important than the guidance that they give. I expect a number of companies to pull guidance with just too much uncertainty to be able to give guidance, and that might instill a negative reaction to the market. So again, I think their headline earnings, although if anyone misses, it could be very negative for them. It's going to be, we've got, consumer defensive companies, et cetera, more financials, to be focused on delinquencies with some of the banks, et cetera, loans, if loans are slowing down, et cetera. Again, any forward indication of where we're headed, more important, in my humble opinion, than their last quarter's earnings. Again, get some transports. So again, the focus, in my humble opinion, focus on what they say the potential impact of tariffs are, what their guidance is going forward, if they pull guidance, etc. Lower capex going forward. That could be, again, very negative for the overall market. So, we're just starting into the earnings season. You can go through the whole list. There's United Health, Netflix. We've got the start of the Mag 7s. So Netflix should not be impacted too much by tariffs. Got Taiwan Semi, so major indicator of the semi, although I expect they'll do well this quarter, probably front running the tariffs again. I think a lot of these companies might do well due to increased purchases from front running tariffs. But if they guide down going forward, again, potentially very negative. So again, we'll be listening for that, the guidance. Again, I took out the bit I usually have about earnings mattering, because again, at this point, I think last quarter's earnings are really less significant than the guidance, and any decrease in capex, decrease in hiring, what their impact of potential tariffs is going to be. So those are the things we'll be listening for. Let me know what you all think. Okay, let me grab another quick drink and we'll go over the market screen in Webull. Okay, just a quick reminder, if you're not already using Webull, you can still get 20 free fractional shares of stock by opening and funding your account with as little as $500. Each fractional share worth $3,000 to $3,000. If you'd use our affiliate link in the description box below, get all your free fractional shares of stock, also take advantage of any other promotions they have at this time, and also help support our BeachBum trading community, all of which we greatly appreciate. Okay, I'm using the market screen in the online browser version of Webull. So we can see the histogram of advancers and decliners from Friday. So we see we had about 2 to 1 advancing to declining, but the percentage of advancing was relatively small. Also, it's kind of interesting. We had a net inflow in the NYSE towards the end of the day, had been oscillating around, going negative, but finally went positive around noon and then trended up into the end of the day. But the NASDAQ just kind of oscillated around that 0 point and actually ended up a little negative. So even though we saw that, 2% rise in the NASDAQ, um, there was actually a net outflow out of the NASDAQ on Friday. So again, my humble opinion, mostly driven by the Mag 7s. See the fear and greed index. This actually went up a little bit. We're now in just fear zone, not extreme fear. So it's actually gone up. So even though we saw, precipitous drop on tariffs on, strong rebound tariffs off, and then slight correction, the amount of fear slowly decreasing again. Possibly, some of the short covering we saw on the tariffs off day. So we'll see if this continues to neutralize or if we go back into extreme fear. Again, you can see next week's earning calendar day by day in the calendar widget in Webull. Keep an eye on who's coming up in the very near future, see their expectations, etc. Let's look at the best performing industries for the week. So semiconductors pretty positive, metals and mining, aerospace defense, healthcare providers, uranium, again, strong rebound in uranium. Looks like led by UUUU, LEU. Construction, pretty positive. Retail, mostly positive. Software, mostly positive. Parts. Again, a lot of this, I think, is a reflexive move to the tariffs off. Coal, again, Trump announcing he wants a resurgence, resurrection of coal in the U.S. Machine tools, got the ETFs. So rebound in biotech. Again, I think this is just a reflexive correction, very negative trend in biotechs, in medical, pharmaceuticals. Up on the Dow right now, again, up on biotech. So if you're nimble, we have these ETFs. You can trade the biotechs, whipsaw in the biotechs, LabU long, LabD short, pill is long. Again, up on the NASDAQ, long on Bitcoin, again, risk on from Friday. Even getting a rebound in the Russell, again, oscillation. So Friday we had a bounce back up after that whipsaw with tariffs off. So everything pretty much green, a little negative in financials from Friday. A little bit cyclicals, but again, mostly green from Friday. long end of the curve, 25-year bonds. High yield showing back up. Okay, so let's look at the futures as well. And we see that, whipsaw with the tariffs on, tariffs off. So big drop when they were announced on quote Liberation Day. Big bounce, one of the record bounces in markets when tariffs were paused, turned off. But again, we see bounce back up to right at about the previous lows, and then again corrected. Now we're oscillating in this range, so it looks like a harmonic oscillator to me. So I expect further oscillations, trying to stabilize. That stabilization should give us a little less volatility in the near term, unless we get news. So we'll talk about that all in our strategy as well. All the foreign markets reacted similarly. So the Russell, but all the foreign markets again followed the U.S. market. So Euro stocks down and then bounced and then corrected. DAX same way. So when tariffs are on, it's negative for all the markets. When tariffs come off, generally positive for all the markets, and then we can dig down into individual countries. And we see that spike in the VIX with tariffs on, decrease when tariffs came off. Again, slowly decreasing volatility, but it's still again very heightened. So it did dip slightly below 30, bounced back up pretty quickly. I want to look at the VIX term structure. I think that's very interesting. So again, you can find the VIX term structure tool on our homepage under the links section. Our homepage is beachbumtrading.com, bum without the U. Go down to references. So we can see the current VIX is still significantly higher than the April futures. And then we see we have a pretty steep backwardation. So even out, 30, 60, there's the 90 days or so from the pause. In my humble opinion, I think this 90 days, when we get to the point where the pause might come off on tariffs, I think we'll see heightened volatility again. So I think this curve needs to move back up into a contango. Again, we've got a strong backwardation, so I think there's some opportunity there in the middle of the VIX term structure. We do have this ETF BIXM in our ETFs Google Sheet that we did a video on and have talked about, that covers the middle of the VIX term structure. Also, if you trade futures. But again, I think this needs to move up. The middle of the curve around that 90-day pause coming off needs to move up. So I think the whole curve, I think the front end's probably going to come down some. Middle of the curve's going to go up some. And the overall VIX will probably come down to get closer to it. So, and I think there's some opportunity there for those that trade volatility, either with ETFs or with futures. We show just the change. Okay, we can see the term structure is showing much higher going out 90 days. So again, I think that will probably move up over time. So let me know what you all think. I hope that all helps. And we saw oil did dip down below 60, bounce back up, regain that 60, kind of stabilizing along that 60 line. So we'll see if that holds, if it trends back up towards 65.70. And natural gas broke down briefly below 350, regained that 350. We'll see if it trends back up to 4. Gold, again, just been a beast. Again, the only decline was on the sell everything on the tariffs on. Once we got the tariffs off, strong rebound back up to the trend. You can see it's just steadily trending up. Broke that 3250. We'll probably see some consolidation along there. Maybe a retest of 3200. You see that 3000, strong support, strong floor. That's where it bounced off of. So again, might get some consolidation around 3200, consolidation around 3250, but again, strong upward trend. Strong rebound also in silver after an even more dramatic decline. It get bounced around 29 or so. So again, support there, support at 30. Just broke 3220. So we'll see if we get some consolidation there. Probably go back and retest 34 again. Strong rebound in copper. All the metals, again, you see they all reacted negatively to the tariffs on, positively to the tariffs off, some stronger than others. Corn, strong rebound, swinging back up. Wheat slowly had consolidated, finally regained that 540 level, trending back up, probably get some resistance at the 580 or so. Well, that's 560 and then near 580. So see probably some resistance along there. But again, swing back up. Again, we're long wheat using the WEAT ETF. Lumber precipitously dropped on the tariffs on. It's kind of interesting, although they didn't add any to Canada. It bounced back up on, looks like the tariffs off. And we see again that precipitous drop in bond prices, spike in bond yields. So they're coming back to almost the low of the year, 30 years near the low of the year. Not so much the 10s, 5s, and 2s. Again, we saw that break down in the dollar, back down below 100. Strong spike back up in a lot of the foreign currencies, euro, yen. I wonder if this increase in the yen might cause a resurgence of the unwind of that yen carry trade. That was negative and increased volatility in the markets. But again, the focus is on tariffs. So Swiss franc rebound. Again, we've got ETFs in our ETF Google sheet as well that you can trade these foreign currencies if you're not a Forex trader. You can also trade futures in Webull as well. Get more information about trading futures in Webull via the link to the discussion in our Discord. Welcome, MD. Thank you for joining us. Hope you're doing well. So let me grab a drink and jump down to our theme for this week. Then we'll come back and talk about how we can use our ETFs Google Sheet to play some of these trade ideas. Okay, again, our theme for this week is making money trading the tariffs on, tariffs off, and whatever comes next. Now what? Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. But first, we got the tariffs on when Liberation Day, quote, Liberation Day tariffs were announced on 4/2, precipitous drop in the markets. We talked about trading Trump's trade war last week, so you can refer to our strategies about how to trade this Trump trade war via our discussion last week. So I want to focus more on the tariffs off and what's potentially coming next. So then again, markets, were headed down when those tariffs were announced, the escalation from a number of countries, etc., retaliatory tariffs. And then he flip-flopped, and on the 9th, Trump announced that most of these Liberation Day tariffs would be paused for 90 days, and we saw that record rebound in the markets, that the tariffs were off, the tariffs were paused. They're not off, they're just paused for 90 days. So we have this 90-day window where most of the tariffs are off. However, the trade war escalation continued with China. So I guess the U.S. got something like 145% tariffs on China. China has something like 125% on the U.S. So essentially, nobody's in China and the U.S. are embargoing each other with these levels of tariffs. And we don't see, I guess China said they're not going to escalate any further in terms of tariffs, but there's a lot of other actions they could take, which may be negative for U.S. trade with China. Also, there's negotiations with a number of countries, and they prioritize certain countries, and we saw rebounds in those international markets. So Korea, they pointed out Korea, Japan, Vietnam. We also saw Israel talking, and those markets rebounded. So the question is, what others, are they going to focus on negotiating with? I guess there was some discussion with India. We saw a little bit of a rebound in India. So again, in my humble opinion, markets are going to be very news driven, focusing on these international markets as we have now for several weeks. So if we get a deal with one of these countries, they lower tariffs, we lower tariffs on them. Neither very positive for those countries. If negotiations break down, again, could be negative for those countries. Again, we have ETFs in our ETF Google sheet for majority of these international markets. Again, in my humble opinion, this is where the opportunity is. It's going to be news driven, based on who can cut a deal with lowering tariffs from the U.S., etc. So not much else I think is going to matter a whole lot. We're going to listen for these announcements, see what international markets may benefit, and you can take advantage of those opportunities. Again, Mexico held up pretty well. Canada has no additional tariffs on those markets. So again, in my humble opinion, focus on this news, which international markets might cut a deal, might benefit short term. And again, we only have this 90-day window. So for the next 90 days, again, in my humble opinion, I think the market might try to recover some. I think it will be a cautious recovery, trying to get back to, at least where we were before these Liberation Day tariffs were announced. And then we'll see there'll be heightened volatility, heightened hedging around that 90-day window, because these tariffs could all be back on again, or with specific countries. So again, want to focus on the specific countries that are still at risk of these tariffs going back on in 90 days. I guess the EU hasn't really done a whole lot of negotiation. They did make some offers, but again, we'll see if there's further negotiations with the EU and some other countries, India, etc. So again, my humble opinion, watch these international. If you're a short-term trader, particularly, like there's plenty of opportunities if you can catch this news, catch these bounces. Korea had a nice bounce on that news after a pretty significant drop when the tariffs were announced originally. So please share any news you hear with your fellow BeachBum traders. Post in our Discord, etc. Any international markets you think may benefit. Also, you can hear our previous discussions on the historical trends in April, though again, I think those historical trends are trumped by Trump's trade war and tariffs. Also, again, tax day on the 15th, you can hear typically some opportunities for making money trading tax season, although again, in my humble opinion, as we saw the consumer sentiment deteriorating, I think the consumers are going to be more hesitant to make big purchases, although again, they might try to front run some tariffs, buy cars, washing machines, etc., ahead of the tariffs. So might make those purchases with their tax refunds and then start holding off. So also trading in the spring. But again, I think the whole focus is tariffs, tariffs on or tariffs off. Where are we going? What's going to happen in 90 days? So again, I expect volatility to increase again and decrease in the next 90 days, and then increase again as we get closer to this expiration of this pause. So let me know what you all think in the comments to this video and our Discord, etc. Love to hear your feedback on what you think is going to occur. Now what? And how can we make money trading in this whipsaw of tariffs on, tariffs off? Okay, now we'll take a look at our ETFs Google Sheet. So we come up with our trade ideas, trade strategies. We use our ETFs Google Sheet. We trade any trade idea, be it long or short, various indices, commodities, international markets, foreign currencies, etc., using our ETFs Google Sheet. And you can do likewise, come up with a trade idea, jump over to our ETFs Google Sheet, find an ETF with the characteristics, composition, the risk reward profile, leverage, etc., that you'd like in our ETFs Google Sheet. So let me check the chat a second. If anyone has a specific index topic, commodity, international market, etc., you'd like to look at, we can do that. Okay, again, I'll try to keep an eye on the chat if there's particular ETFs y'all want to take a look at. Otherwise, you can find ETFs. We were talking about the international markets, and you can do a find in our ETF Google Sheet to find various ETFs to long or short these international markets, either in the main ETF sheet or in the research sheet. So you saw we have a couple for longing or shorting Japan. Also have South Korea. We like this leverage long South Korea. So you can see we have a number of them. They're all longs. Some of these ETFs are shortable. So if you're able to short in your account, you could short this. Genkoru had a nice rebound after the negotiations with Korea were announced. We have a number for India, etc. Talked about Brazil. Brazil held up pretty well. I know Kayton likes Brazil. See, it had a nice bounce on Friday. We like this BRZU to long Brazil. And you can see all the Chinas. Again, China held up, rebounded on Friday. Talked about that coal. We've got a couple stocks for coal. Peabody and Met C. We're already long Met C. We're coking coal. Again, you can do a search for various countries. Also, we have foreign currencies in our ETF DB sheet. So again, you can do a search for various currencies, or you can see strong rebounds in all of the foreign currencies on Friday, deterioration of the dollar. So again, some of these ETFs may be shortable. So if you want to short a foreign currency, you can possibly short those ETFs. If you want to long a foreign currency, you can just long these ETFs. Again, you can find the ones with the risk reward profile that you like. Again, we see, the foreign currencies also react to this tariff on, tariff off, whipsaw, as do the international markets. So we've also got, the US dollar, treasuries, etc., ETFs. So US dollar short or long, also different time frames for treasuries, and you can trade both the yield or the price. Seeing if anyone in the chat has any others you want to take a look at. Again, we have some single stock ETFs for a lot of the Mag 7s in both our main sheet and our research sheet. So if you think the Mag 7 is going to bottom and rebound, I know a lot of our BeachBum traders like these leveraged long and short single stock ETFs. Also, I probably missed the previous bottom in VTI. Did have a quick bottom at about 236.50, and then this is the total world, including international stocks. Did have a significant rebound, probably some oscillation there. Talked about transports. We watch the transports, and still relatively low. Could bottom out after these tariffs are reapplied. Might get a short-term rebound. Again, negative for travel. Got that rebound in uranium. I was hoping to catch that rebound. I didn't catch that, so congratulations to any of our BeachBum traders who caught that rebound in uranium using URA, URAX. Okay, Todd's talking about the Brazil ETFs. Again, EWZ, BRZU, short with BZQ. Probably have some others in our research sheet. So we've got a number of ETFs for Brazil and some small caps, etc. So if you're looking for an ETF on Brazil, look at their risk reward profiles, composition, etc. Got some for Canada, Mexico, etc. So again, use our ETF Google sheet, find the ETF, to trade your trade idea, be it long or short, in various commodities, etc. International markets, foreign currencies, financials. Been talking about FAZ. A lot of people short financials, FAZ, long, FAS, gold. Again, a lot of oscillations. We've got a number of ETFs. You can trade gold, long or short. Again, in my humble opinion, I think with these whipsaw markets, short-term traders, day traders, scalpers are probably going to perform better than our style of long-term swing trading. So as we'll talk about again, here's Mexico. Again, we've got a number on Mexico. It's held up pretty well. Again, our style of long-term swing trading will be waiting for a bottom, trading the short side in the meantime. And then when things bottom and swing back up, then we'll be looking for recovery. And again, the next 90 days, I expect, slow bleed back up and then higher volatility when those the tariff pause potentially expires again. Bulk shipping up a little bit. Play the rebounded silver, AGQ, etc. So again, if you have any other ETFs, Vietnam, we've got some Vietnam, Malaysia, Indonesia, Thailand we've talked about. And we've long wheat. And the yen trending back up. So again, if you have any other ETFs you'd like us to look at or do research in, please put those in the comments to our video or in our Discord. Tag us in our Discord. We're at BeachBum Trading, all lowercase, no other characters, symbols, etc. Anyone else is an imposter, please ignore and report them. Again, if you have any questions, comments, requests for research, a stock, an ETF, etc., please put those in the comments to our video or in our Discord. Also, we really need your feedback on what we can do to continue to improve our weekly trading game plans, our other videos, our tools, our Google Sheets, our community, etc. Again, we really need your feedback on what do you want to see more of, less of, what can we do to improve and continue to add more value for all of our BeachBum traders. We also hope that you like this content. Hope you'll do us a favor and please smash the like button on our videos. Help us try to get the Google algorithm to someday show us some love and share our content with more traders around the world. Help us continue to grow our BeachBum trading community. Also, we'd really appreciate, we really need your help to directly share our content with your fellow traders, repost it on your social media sites, etc. Invite your fellow traders to join us in the live chats, join us in the Discord, etc. To continue to grow our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So thank you again to everyone that participated in the live chat today. Everyone watching after the fact, we hope you'll come back again tomorrow for part 2 of our weekly trading game plan for this trading week, 10 a.m. on Sundays, where we'll take all these trade ideas, trading strategies, and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. We'll also talk about how we can use dividend payers and several option strategies to generate income while we wait for our swing trading stocks to set up. So we hope to see you all back 10 a.m. on Sunday for part 2. Thank you again and have a great day.